welcome friends. In this video we are going to discuss about auditing NBFC, that is non-banking financial company related all test your knowledge questions. So as per ICAI study material, so first questions, test your understanding. First question, FinCrazy is a P2P online platform owned by Future Technology Private Limited, which is registered with RBI as NBFC. So one FinCrazy company is there, and it is owned another company, Fin Technology company, which is registered as NBFC, and where peer to peer P2P means intermediary providing services of loan facilitation via loans online medium or otherwise to participants. So P2P means with the person having intermediarily they are providing the services and loans. Okay, and participants how to enter into an arrangement with NBFC P2P to lend on its platform or avail loans facilitation services provided by it. So it provides only a medium connecting lender and borrower. So what he is doing here, Future Technology Private Limited just acting as a agent to the participants, and they will arrange the loan, and they will simply connecting the lenders and borrowers to the participants. Okay, it is also carries out the credit assessment and risk profile of participants on the platforms. Some companies will give credit rating like Moody S&P 50 and credit cycle. These companies all will credit rating AAA or AAA plus. So if you have high credit rating, you will get more flexibly and loans will be available easily. If you have low credit rating, it has more risk. Okay, next, these services also providing by this company, and it also provides services relating to loan document and loan recovery. So it is also providing loan documentation. So whenever you are entering into the bank any loans, they may charge some documentations and you need to go for the actuarial services. So these all are provided this company only. The company falls outside the preview of upper layer. So we have four types of layers: base layer, middle layer, upper layer and top layer. So where does such NBFC fit into accordance with scale based regulation? Suggest few audit procedures. So we need to provide some audit procedure for above NBFC P2P. Here when entity is provided, this is NBFC, non-banking financial company, and it will be fall under base layer. So it will be fall under base layer. Here we will discuss. So it will fall under the base layer based on the scale based regulations. So after that, what we knew, we required some procedures for auditing the base layer NBFC. So for that we need to take, firstly we need to understand the business. So for conducting whatever they are doing and whatever the permittable activities applying to such companies, or is they providing any online marketplaces to participants for lending and borrowing. So it should not engage in business of lending funds on his own. So because this is NBFC, they only arranging the loans. So for that we need to understand the business of, firstly for the purpose of procedure we need to understand the business, what is the gain that the entity is getting, and after that we need to verify the certificate of registration must be obtained from the RBI for carrying the business of P2P for platform. So auditor need to verify the certificate of registration is obtained or not. If not obtained, it may see whether the application is filed with the RBI, is it pending. If it not applied the application, also take the reason why they are not taking any application or not applied for application also. And after that we need to see the board approvals. So what are the board approvals? What are the policies they are setting for eligibility criteria for participants who are there in participant, that is borrowers, lenders? What are the criteria they are mainly seeing? So is there as per the board approval or not? Next, after that board approval, policy must be pricing of services provided to P2P platforms. So whatever they are paying the price policy, it must be also board approval. As per the board approval policy only they need to pay any pricing. And see the adherence to lending and borrowing guidelines as per. So what are the lendings and borrowings guidelines as per RBI? So as per RBI, what are the lendings and borrowings guidelines prescribed by the RBI, and verifying the appropriate arrangement has entered into with among participants. So what are the arrangements they are providing? So arrangements have entered into among participants NBFC P2P. And after that we need to see the reporting requirement as per RBI. The NBFC, what are the reporting requirements? So some entities required to provide quarterly basis reports, whether the company is applicable that a quarterly based reporting is that providing quarterly or not. We will see the reporting requirement of RBI. And what are the grievance redressal and companies compliances? So is for board approval is there for grievances redressal. So whatever the problems is there for the participants, they are allowed to ask, they are allowed to provide their problems, that is grievance, or how they are treating that grievances, that problems, and how they are raising the complaints, what are the pendings there in the cases. So for P2P, here the company is P2P which is not there in the company, not fall in the upper layer, it will become in the base layer. And audit procedure will be, first we need to understand the business. So for gaining an understanding of business conducted, verify the company's permissible activities and what is the type of NBFC we need to see. And after that, certificate of registration, whether it has registered or not. If it is not registered, either it is applied or not. If it is not registered, not applied, take the reasons. And board approvals for policy setting, the eligibility criteria, what are the participants they are provided, and what are the pricing policies of services they are provided, and verifications, what are the adherences they are provided, what are the complaints reporting requirements are there for the company, is that reporting requirements are followed or not, and board approval for grievance redressal and complaints are provided or not. That is first question. Next, second question, what is there in second question? Sugam House Financing Company. Okay, this is Sugam House Financing Company in the business of house financing activity, having asset size of 800 crores. Means here the company has asset size was 800 crores. Means it has more than 200 lakhs, more than 500 crores. So more than 500 crores means it will come under the company will be come under the, I think it will come under middle layer. So whenever the company is up to 500, it will be base, and more than 500 it will become under middle layer. Now Sugam Housing Finance Limited will come under the middle layer. Next, its principal business is providing finance for housing mainly to individuals. It is not identified by RBI in upper layer. When it is not identified as the upper layer, it will become under the middle layer itself. And under the scale based regulations introduced by RBI, what should be the appropriate classification for such companies? So appropriate classification will be middle layer. And is there any specific reporting requirement under CARO 2020 for statutory auditor of company engaged in house financing activity? Yes, under CARO 2023, as per para class 16B of the CARO, auditor need to report is any NBFC is there or any house financing activity, whether it has obtained a valid certificate or not. So the auditor need to provide the CARO requirement. So first question answer will be, the company is not identified as a upper layer, so it will become under the, it is a house financing activity, and so it will come under the middle layer. And where the asset size is not relevant in such cases, so whichever the all financing companies which is not identified as upper layer. When it is not upper layer, it will come under the middle layer, because here asset size is not criteria, and where has constitute middle layer due to nature of such activities undertaken. And second question for CARO question. So CARO class class uh, class 3 16 B. So talks about NBFC, which is required the auditor to report whether the company is conducting any NBFC or house financing activity. If it is providing any NBFC or house financing activity, they must obtain certificate of registration as per section 45 IA of the RBI Act 1934. So we need to see that company has their valid certificate of registration or not. So for the second question, the answer will be first, it will be come under the middle layer, and second question has for CARO 16 class 3 of CARO 16, it will be required certificate of registration is there or not. Next question number third one, you are the auditor of deposit taking NBFC. So whenever it is deposit taking company, we need to indicate D at the end, sufficient. So suffix will be provided as D. If it is non-deposit, ND will be suffix will be provided. Okay. Next, the NBFC is identified by RBI in its upper layer. So whenever the RBI, so for we have four layers. One is base layer, one is middle layer, one is upper layer, one is top layer. So here we, if the company wants how asset size less than 500 crores, it will come under base layer. Greater than 500 crores, it will come under middle layer. And here some top 10 companies will come under here, it will be specified by that RBI. And here out of it may identify some credit parameters or risk parameters by considering it will decide our top layer. As of now, top layer is nil, there is not fixed any companies. Now our company was in upper layer, which is indicated by the RBI in the financial statement, are required to prepare accordance with requirement of Ind AS. The following the extract of statement of profit and loss account are year ending 31st March 2013 in accordance with Division 3 of Schedule 3 of Companies Act. So we have three divisions, Division 1 and Division 2 and Division 3. Division 1 is applicable to companies which are using the accounting standards, and Division 2 is applicable companies which are using the Ind AS other than NBFCs. Division 3 is applicable companies which is NBFC which is using the Ind AS. Now here they are following the Division 3 of Schedule 3 of Companies Act 2013. Previous year figures was provided, ignored. Now means whenever we are providing the balance sheet, we need to provide current year and previous year, so that we are asked whenever we see the balance sheet, we must provide the comparative. And some cases, in three cases, we need to provide the opening balance sheet also, when we are using retrospective effect, or when we are restated the financial statement, or whenever restating of reclassification, we need to provide the opening balance sheet also. So that they are telling you need to ignore the comparative. Okay, interest income, they are provided dividend income, rental income, fee and commission income, net gain, fair value changes, and derecognition of financial instruments incomes. Total revenue for operations 9,900, other income 1,000, and total income will be 10,000. Now on going through the details of head other expenditure, in other expenditure expense side of statement of profit and loss account, it is noted that there is an expenditure relating to manpower outsourcing costing amounting to 99.5 crores included under other expenditure. As per NBFC disclosures, some items must be disclosed separately. So whenever the company preparing the financials, so separate disclosure will be required only when the amount exceeds 1% of total income. Now the total income will be 10,000. On the 10,000, 1% it will become, I think so, 10 10 or 100 crores. 100 crores. 1% means 100 crores. It will become 100 crores. Now the amount is 99.5 crores. So less than 1%. So does not exceed the 1%. So it is meet the division 3 of schedule 3 of the Companies Act. So the answer is that it meets the requirement of division 3 of schedule 3 of Companies Act. Yes, it meets the requirement of division 3 of schedule 3 of the Companies Act, because NBFC which is preparing financial statement is in accordance with the requirement of division 3 of schedule 3 must be followed, and it must be separately disclosed by way of any notes of any item of other expenditure which is exceeding the 1% of total income. Now the said expenditure which is 99.5% does not exceed the 1% of total income. So it meets the requirement of division 3 of schedule 3. Now integrated case scenario. Here one person is there. Okay, who is the person? CA Parampara. This is CA, and Parampara is a statutory auditor of Lohit Finance Limited Company. So he is the auditor of Lohit Finance Limited Company, which is microfinance institutions working predominantly in state popularly described as seven sisters of Northeast, West Bengal, Odisha and Andhra Pradesh. Okay, now it is non-deposit taking company. So whenever it is non-deposit company, it is suffixed as ND, and taking non-deposit taking NBFC catering to credit requirement of rural and semi-urban households and provide small ticket loans. She has performed audit procedure for year 22-23, and following further information was provided. So Parampara was audited one NBFC, and she provided some procedures here. So first one, the board of directors of company A has passed a resolution in its meeting held on 1/5/2022 for non-acceptance of public deposit during the year ended 31st March 2023. So we need to see the board resolution for non-acceptance. So he has checked. Next, after that, the company has obtained a certificate of registration dated 15th March 2012 from RBI in pursuance of Section 45 IA of RBI Act 1934, and it is entitled to hold such certificate of registration in terms of financial assets income pattern for the year ended 31st March 2023. So we are performing a procedure for year 22-23. Now the year pattern certificate of registration is existed as on the date. Now company has identified instance of cash embezzlement by the employee during the year. Okay, some fraud. They are for the purpose of fraud identification. We have divided some items. So in that one his instance is cash embezzlement by the employee in the year. Such instance relates to employee fleeing after collection of installment from customers at some centers. Total amount involved is 15 lakhs, and 5 lakhs have been recovered subsequently. The matter also been reported in the note number 35 of financial statements. So amount involved 15 lakhs and 5 lakhs has been recovered. 10 lakhs is not recovered. The employee, so doing the employee, one person is taken 15 lakhs, and from that person we are collected only 5 lakhs, and it was mentioned in note number 35 of financial statement. Okay, it falls in the middle layer of scale based regulation, and regulations for the systematically important non-deposit taking company are applicable to it. Its capital adequacy ratio is stated in note 36 of financial statement. Okay, audit procedure performed by her included testing design and operating effectiveness of the controls relating to allowance for loan loss using expected credit losses. So in instruments, financial instrument, we will discuss about expected credit loss in accordance with India AS 109. Test of details performed by her include verifying assumptions affecting the ECL calculations. Now, keeping in view of the above, answer the following questions. First of all, Board of Directors has passed the resolution for non-acceptance of public deposit during the year 22-23. So, they are passed the resolution for 22-23 when they are passed 1/5/2012 they are passed the resolution, and which of the following statement is most appropriate in this regard as regarding to reporting requirement obligation of the auditor or concerned. Now what is there here, we need to provide the additional report of the board of directors of the company. So what is they are passed the resolution. So passing of board resolution for non-acceptance of public deposit being internal governance matter is not required to report the auditor. Wrong. So auditor need to report. And matter passing of board resolution for non-acceptance of public deposit is specific reporting requirement for auditor under CARO. No, in CARO they will not ask about this point. Matter of passing board resolution for non-acceptance of public deposit is a specific reporting requirement in auditor's additional report of the board of directors of the company. Yes, it is correct. And matters of the passing of board resolution for non-acceptance of public deposit is specific reporting requirement in auditor. So CARE is not impacted. So this two is wrong, and first absolutely wrong. So option C is the correct answer. Next, which of the following statement is most appropriate in respect of reporting requirement relating to certificate of registration of the company obtained from RBI as described in para B of the case? So in para B what they are discussed, the company has obtained a certificate of registration, so they need to obtain certificate of registration, they are obtained, and it is entitled to hold such certificate of registration in terms of financial assets income pattern for the year ended 31st March 2023. So now firstly auditor need to verify that certificate is there or not, and whether the certificate company is entitled to hold such certificate in the terms of financial assets or not, we will verify as per CARO. Now if this is the duty of the auditor to report whether the company has obtained certificate of registration as required under section 45 IA of the RBI Act in additional report. No, not in additional report, it will be reported in CARO 2023 class 16. It is the duty of auditor to report whether the company has obtained certificate of registration under 45 IA of RBI Act. Additional report of the board of directors of the company as well as CARO. No, it is also wrong. It is the duty of the auditor to report whether the company has obtained certificate of registration as required under section 45 IA of the RBI Act under CARO 2020. It is also wrong. And it is the duty of auditor to report whether the company has obtained certificate of registration as required under section 45 IA of the RBI Act 1934 in auditor's additional report of the board of directors of the company as well as CARO. Further, yes, it is further, it is also required to report in auditor's additional report to board of directors whether the company is entitled to hold. So he also mentioned this point, entitled to hold such certificate in terms of his financial assets and income pattern, we need to recognize it. So option D is the correct answer for second question. Next, third question, regarding instance of cash embezzlement identified by the company during the year, which of the following statement is best fit in reporting requirement of an auditor? So whenever they are whenever the identified such instances required to reported in under CARO 2020 under relevant classes. So option A is the correct answer. Next, cash embezzlement amount is less than 1 crore, no reporting, it is not there, and such instances are required to be reported under CARO as well as auditor's additional board report, and such instances are specifically reported in auditor report 143 of the Companies Act. So it is required to be reported under CARO 2023 and 20 under relevant classes. Next, question number fourth one, has regard description of capital adequacy ratio has described in para D of case, which of the following statement meet the regulatory requirement? So what is there in para D? In para D they are mentioned about it falls in middle layer, okay, and which is scale based regulation, and which is scale based regulations systematically important non-deposit taking company, and where has it is capital adequacy ratio is stated in note 36 of financial statement. So they are mentioned in note 36 of 36. Now whenever the auditor is ascertaining, it must be disclosed in one form is there, that form is NBS 7 form will be provided, and such ratio minimum which is CR will be there as per RBI. Now, auditor has to ascertain and verify whether such ratio has been disclosed in the financial statement notes to account. Is it wrong? And auditor has to ascertain and verify whether such ratio is disclosed in NBS 7 has been correctly arrived or at. It is also somehow and minimum requirement will be required, and auditor has to ascertain and verify whether such ratio is disclosed in NBS 7 has been correctly arrived at, and whether such ratio is in compliance with minimum CAR. So it will be option C the correct answer. Next, auditor has performed audit procedures and relating to allowance for loan losses using ECL in accordance with Ind AS 109. Had these allowances involve significant judgment and estimates, she want to state how it was addressed by her and how she can do it. So when identifying any items relating to that item is existing in the financial statement, so if it is existing in financial statement, you can provide in emphasis of matter paragraph. If the item is not there in financial statement, other than financial statement, we will be provided in other matter paragraph. Now the audit procedure performed relating to loans, loans will be there in financial statement, so it may be provided by identifying it is in key audit matter in independent auditors report. So it is professional judgment, whereas by stating it auditor additional report, no, it is required under 143.3 and incorporating emphasis of matter paragraph, no, key audit matter in independent auditor report. This is the answer. And after that, next questions will be theoretical questions. We will see the theoretical questions. What are the theoretical questions? Now first question, define NBFC. What we need to provide? Define the NBFC. Also give this description. Just a second. So description about types of NBFC covering any 5 NBFCs. So for that we will see the NBFC definition. NBFC is a financial institution company and which meet the formula, that is 50-50 ratio, and for that year they will provide the ratio. So NBFC means a financial institution which is a company. Firstly it is a company, and NBFC which a company and which is a principal business and is receiving deposits under any scheme or arrangement and any other matter, and such NBFCs are class of such instruments which previous approval central government will be required. NBFCs examples: Unit Trust of India, Life Insurance Corporation, General Insurance Corporations. And whereas we need to treat it as NBFC only when the financial assets constitute more than 50% of total asset, and that income will be generated out of the financial assets will be more than 50%, then it will be treated as NBFC. And we need to provide some types, types will be here. So these are the key types of NBFCs, which is now they provided here: asset finance company and offset financial company, mortgage guarantee companies will be there, and so asset finance company, investment company and mortgage guarantee company and loan company, and after that investment credit companies, infrastructure credit companies, and infrastructure debt fund companies, which is provided. And after that systematically important core investment companies, and whereas mutual funds, institutions and factors. So here NBFC factors. These are the types of NBFC. So NBFC and its types we are provided. And after that, second question, Shubham. So here Shubham and associates are going to start the audit of NBFC. So these are the persons auditors, they are going to start the NBFC audit. They are not performed much work for NBFC in the past year. You are required to explain the requirement related to registration and regulations of NBFC, which an auditor need to keep in his mind while planning the audit of NBFC, which would help this firm. So, whenever we are going for auditing, so auditor need to kept in his mind first point relating to 45 IA of registrations or as per RBI Act. So the company must have the certificate of registration. So certificate of registration will be required. Without no NBFC shall commence or carry any business of without having the certificate of registration. So if you do not have the certificate of registration, NBFC is not allowed to have. If the company has NOF, that is net owned funds, 25 lakhs, it is previously, as of now it will be 2 crores, that is 200 lakhs will be there, not exceeding the 200 lakhs as specified by the NBFC in official gazette. So as per now it will be revised, it will be 2 crores, and whereas entry point norms 25 lakhs. So certificate of registration required whoever having net owned funds. Now the company which is under the Companies Act who wants to start NBFC, they must get this certificate of registration from RBI, and if they do not have the certificate of registration, at least they apply for the registration, which is prescribed from along with some necessary documents. Whatever the documents will be required, they need to provide. So application and documentation will be provided, and this application and document will be submitted to RBI, and after the RBI satisfying, certificate of registration will be provided. And the conditions, what are the conditions specified in section 45 IA of the RBI will need to satisfy. However, to dual regulations, certain category of NBFCs which are regulated by other regulators, some companies NBFCs will be exempted to take this ROC, certificate of registrations. Some companies will be there, such companies like venture capital companies is there. So venture capital companies and merchant banking companies and stock broking companies and nidhi companies notified, which is notified under section 406, or insurance companies. So they will follow their separate laws will be there. So for insurance companies, they will give the certificate of registration as per IRDA, and nidhi company they will follow as per section 406. Chit company they will follow Chit Fund Act. Housing finance company they will follow National Housing Bank. So these are not required certificate of registration from the RBI. Next, RBI has issued directions to these NBFCs for acceptance public deposits. So you need to see the public deposits and prudential norms. What is the prudential norms? Prudential norms means like capital advocacy norms they will provide, and income recognitions they will provide, and asset classifications, and for provisions for bad and doubtful debts, risk exposure norms, and other methods will be provided for financial solvency reporting by NBFC. So what are the directions they are provided? These directions, if non-complied by that NBFC, need to be reported by this entity. Next, question number third one. Satyam Private Limited is company engaged in trading activity. It is also has made investment in shares of other companies and advanced loans to group of companies amounting to more than 50% of total assets. However, trading income constitutes majority of its total income. Whether the one is company has given financial assets is more than 50%, but income is less than 50%. Whether this company is treated as NBFC? No. When company want to satisfy the both conditions, here both conditions mean that financial asset must be have more than 50%, and financial income from that financial assets also required 50% here, and the condition will be specified. So if they are not satisfied any one, it is not a treated as NBFC. They are not providing the non-banking financial services. Now, in order to identify the particular company NBFC, will provide both assets and income patterns as evidence. You need to take as per latest audited balance sheet. We will consider for this purpose. So, to decide the principal business, so only the company is treated as NBFC when financial assets constitute more than 50%. So all financial assets more than 50% from total assets, and it must be netted off the all intangible assets, and income is from that financial assets also greater than 50%, then only, that is gross income, then only if the both conditions is satisfied, it will be treated as NBFC and would be required to register as NBFC by RBI. So in the given case, the certain company, he is fulfilling the criteria of asset side, but it is not fulfill the criteria of income side, so the company does not classified as deemed NBFC. It is not treated as NBFC. Next, company Shivam and Co. LLP are auditors of NBFC. Okay, it is provided the one company is there, and some of the team members of the audit team who are audited this NBFC have left the firm, and new team members are discussions with the previous team members. So company is auditors and some team members have audited this left from the firm, and new team members are in discussion with the previous team members who are still continuing the firm regarding the verification procedure to be performed. In this context, please explain what verification procedures should be performed in relation to audit of NBFC, investment and credit companies. So what are the items will be required? That is audit checklist. We need to see audit checklist for audit of the NBFC. So audit checklist here, audit checklist will be verified. So yes, here the provided audit checklist. In audit checklist, the company, so the question will be asked based on this. So NBFC, investment and credit company, which is given as example. So what are the audit points required to covered for the companies in a general? So this is the audit checklist, which whenever doing the audit of NBFC, you need to cover this all points. What are the points will be there? We need to verify the all shares and certificates held by the NBFC, and whether any security is lodging with the institutions or bank. You need to see the certificate from that bank effect must be verified, and NBFC is not advance any loans against their own shares. So for their own shares, they do not allow to give the loans, and verify the dividend income. So for dividend income, they need to recognize as income only when it is getting right to receive. Right to receive will be received only when the company pass the resolution in the annual general meeting. So up to passing of annual general meeting, company NBFC is not have any right to recognize as income of dividend income, and if it is a interest income, so they need to account as per accrual. But if it is NPA items, only when it is realized, then only required to recognize it. But in some cases, whenever the items, so NPA will be only cash basis, and NPA has some options for dividend income accrual basis when the company is AGM provided, receipt of payment is established. And if the bonds, if the NBFC is invested in bonds or debentures or government bonds, they will provide the rate of interest and the bond paper itself. If the bond paper itself the rate is specified, then you can regard it as predetermined amount accounted as accrual basis, and if the interest rate of this instrument is predetermined, in the interest is served regularly and not in arrear. And after that, we need to verify the broker's statement with reference to price by the stock market quotations of the respective data. We need to board minutes for purchase and sale of investment. So how they are investing, how they are selling that investment, so what are the board resolution they are taking, what is the management certificate for that current investment and long term investments, how they are classifying these are current investments or long term investments. For that we need to verify the accounting standard 13 also, and investments which are valued in accordance with NBFC prudential norms and advocate provisions for fall in the market value will be considering or not. So whenever you are investing, the entry will be investment in securities account debit to cash or bank. Whenever the market value falls, so unrealized loss will be recognized, unrealized loss account debit to investment in securities. So whenever high price is increased, unrealized gain will be recognized, that is investment in securities account debit to unrealized gain or loss. So whenever we are selling, we need to set up this unrealized gain that will be realizing. So obtain the list of subsidiaries or group companies from the management and verify the investment made in the subsidiary group of companies during the year. So ascertain the basis for arriving the price, how they are arriving for the price for the related parties. Check whether investment is unquoted. If the investment is unquoted debentures or bonds have not been treated as investments, these are purpose of income recognition or classifications. And after that we need to see the accounting standard 13, accounting for investment or other accounting standards if it is applicable. And in respect of shares, securities which are the held depository, obtain the confirmation from the depository regarding the shares securities held by on behalf of NBFC. Verify the securities of same type. If the company has the same block of securities, we need to group it. So what is the class received back by the lender or paid by the borrower at the end of the specified period together with all corporate benefits. So, corporate benefits means whatever dividend, bonus, rights, interest or any other rights or benefits accruing thereon. Verify the charges received or paid in respect of securities borrowed. And what are the confirmations means from the intermediary regarding securities deposited or withdrawn at the year end. And auditor examine whether each loan or advance has been properly sanctioned or not, and verify the what are the conditions attached to the sanction of each loan, so and what is the limit of that borrowing, what is the nature of security, what is the interest, what is the terms of repayment will be provided. And auditor should verify the securities obtained and agreement entered into, if any. So if there is any agreement is entered, and what are the who is that concerned party, if there is any advance is given, how they are adjusting that advances, if there is given any guarantee, how they are the borrower is considered, and obtain the balance confirmation from the concerned parties. And after that, as beefy company is entering into bill discounting, letter of credit, letter of intent, we need to records documents, we need to verify proper documents or records, what are the bills discounting, what is the re-discounting, and we need to test check some transactions referring to documents, how they are accruing, how they are paying the discounting charges, how they are mentioning the due, how they are accounting in NBFC. Check whether NBFC is not lent or invested in excess of specified limits, so they have their limits and they do not exceed the specified limit for the single borrowers or group of borrowers as per NBFC prudential norms. And auditor should verify the NBFC advocate system of appraisal system is there or not, whether any misstatements or any fall of the loans and advances is there or not. If the person is not paying, what are the measures they are considering, what are the measures they are taking for the purpose of recovery of the amount. And check classification of loans and advances, that is bills, purchase, discounts, NBFC standard, substandard as doubtful assets, loss of assets. So how we can classify this one, standard assets and which is having, and substandard which is become the NPA up to 18 months it will become substandard, more than 18 months it will become doubtful. And loss asset means the bank itself is saying that a person, this asset will not be realizable, it will be recognized in loss of assets. Advocate of provisions, doubtful debts will be provided. This is just a list provided, it is not a exhaustive, just illustrative purpose they are provided some items. Next, after that, next question will be fifth one, who are appointed as NBFC NBFC registered with RBI and which is accepting and holding public deposits. You are considering your reporting requirement in addition to your report made under section 143 of the Companies Act on account of this NBFC as per prescribed directions. So here we are appointed as NBFC which is accepting public deposits. So they are accepting the public deposits. Now please explain what are the points are required to be known in respect of separate report to be given by you to the board of directors in this NBFC. So we need to verify the NBFC whenever they are accepting public deposits. So we need to give some additional report. It will be provided. So for that purpose we need to provide NBFC cases. So para 3 will be provided. So that one 7 para 3 here for the matters to be included in auditor's report to the board report. So this matters, these materials to be included in the auditor's report whenever we are providing to board of directors. Here auditor reporting on account bank NBFC shall include a statement of following matters. So here the following matters will be included in whenever we are providing to board of directors. So this is separate report which we are providing here. So for this here the what they are conducting NBFC activity, if without having a valid certificate of registration granted RBI, if they do not have the valid certificate, it will be offense. When they are giving any loans, so it must have the valid certificate. If does not have the valid certificate, it is offense. So it is not allowed to go without having the valid certification. So the company must have the certificate, then only provide this NBFC services. Therefore, if the company is engaging in the business of NBFC, they must obtain the certificate of registration when it meets the principal business criteria. Principal business criteria means 50% financial assets and income from financial asset more than 50%. So whenever it meets this criteria, it will be required for certificate of registration. So without having certificate of registration you are conducting NBFC, it is offense under chapter 5 of RBI. So this point will be mentioned in separate audit report. And after that, in case if the company is holding certificate of registration issued by the RBI, whether that company is entitled, so we need to provide the on matter that company is entitled to hold such certificate of registration as on that 31st March applicable year or not. So for if the principal business criteria is not satisfied for that year, for example the other income is exceeded 60% then financial income, then that NBFC is not entitled to hold that certificate of registration. So we need to mention that point. Next, third point, whether the NBFC is meeting the required NOF, that is net owned funds, is method NOF is as per the master direction. So for master direction we need to see the two master directions. So here for one is NBFC which is systematically important company, and another one is NBFC systematically important taking company which is deposit taking company's directions. So we need to see both directions, which is non-systematically important and systematically important directions. So for here for both 3 points we are required to provide. So first one is valid certificate of registration and whether this certificate is entitled or not, and whether the certificate entitled, and after that as the certificate of registration entitled will be 31st March, and after that we need to NOF. For NOF we need to see the master directions, and every NBFC financing company shall submit certificate for its statutory auditor that is engaged in the business of NBFC financial institutions, requiring to it hold certificate of registration section 45 IA of the RBI Act. It need to hold it as on 31st March, whenever they are hold. A certificate of from statutory order is regarding with referring to position of the company at the end of the March. So every March, 31st March, if you are seeing, we must take that certificate and we need to see whether they are entitled or not, and where the this certificate at the end 31st March certificate may be submitted to that regional office reeling of the department of that jurisdiction, which jurisdiction is this NBFC is existed within 1 month from the date of finalization of the balance sheet, and in case not later than the 30 December will be provided that certificate to regional officer which is in this jurisdiction. And what is the format of that statutory auditor certificate, that is tax to be submitted by the NBFC, has been wide provided as per financial companies reserves directions, it will be provided. So for all what are the matters we are including here we are focusing on. One is without having valid certificate it will be offense, and after that that certificate must be obtained from the RBI, and after the certificate obtaining, that certificate must entitled to continue will be seen as on 31st March every applicable year. And after that we need to see NYF, that is net owned funds, which is for we need to see the master directions. For master direction we will provide the two master directions. One is non-systematically important non-depart taking company and systematically important non-depart taking and depart taking company directions. And after that these companies, these NBFCs will provide that certificate to statutory auditor, and that certificate will be regarded, and this reference position will be submitted that certificate to regional office which is there in the jurisdiction of NBFC within 1 month from the date of finalization of balance sheet or not later than the December. And another one here after that we need to provide if it is in case of NBFC company accepting holding public deposit. So as per this mainly now the company if it is accepting the public deposit in your company, for this is for all NBFC, this is for all NBFC, but our case will be our company is accepting and holding the public deposit. So these are the point mainly for this. So for above will be mandated for all NBFCs. In addition to this, the auditor shall include the statement of following matters, namely whether the public deposit accepted by the company together with other borrowing included from public by issue unsecured non-convertible debentures or bonds. So if company is accepting public deposit by issuing the unsecured non-convertible debentures or bonds, we need to provide. So this company is taken money from the public and they issued these unsecured bonds, and from if they are taking the amount from its shareholders, if it is public limited company it should be mentioned, and from entities which are not excluded from the definition of public deposit in the public financial acceptance of public deposit directions is within the limit of admissible company as per the provisions of NBFC. And whether the company is public deposit held by the company in excess of quantum of such deposit permissible to it under the provisions of NBFC directions. So we need to see the how much quantum will be required, is there any excess of quantum of deposit is there, and it should be mentioned in this separate report, and whether the NBFC of the company accepting public deposit without having the minimum investment grade rating for an approved. So from an approved agency they must have the credit rating. If the company is not having the credit rating, they should not accept the public deposit. So for accepting the public deposit they must have the credit rating. So without having the proper credit rating they do not accept the public deposit. Or whether the company ratio, advocacy ratio, CAR ratio, capital adequacy ratio in the return submitted bank in terms of NBFC, that is two direction. One is the direction systematically important non-deposit taking company and deposit taking company direction will be correctly determined or not complied with the minimum CAR mentioned is followed or not. In respect of NBFC, firstly, if the company is whether the credit rating of each deposit, so here we will see for each fixed deposit scheme that has been assigned by one credit rating agency listed in non-banking financial companies. So we will see the credit rating is provided properly or not, and the credit rating, if the company is downgrading credit rating, they do not allow to accept the public deposit. So if aggregate amount depositing outstanding at any point of time during the exceeding limit specified of such credit, if the company violated any restrictions or acceptance of public deposit as provided in NBFC, then if there is any defaulted paying depositors interest principal amount deposit of such interest that also provided in the report, and whether the company has complied prudential norms complied or not, that is recognition, income recognition, accounting standard, asset classification, or provisioning for bad and doubtfuls, and concentration of credit investment are specified in master directions, and whether the company has complied with liquid asset requirement, or whether the details are designated banks which be approved of securities or not, and company has furnished the RBI with stipulated period returns, that is NBFCs need to provide the certificate of quarterly basis reports. So whether that quarterly basis of reports was providing or not, whether the company has furnished the RBI with the stipulated period quarterly returns prudential norms as specified in the NBFC, and if there any new branches are opening or new offices are collecting deposit or appointing some new agencies, they must comply with the requirement of NBFC directions. This also we need to provide, and in case of non-banking company, he is not accepting public deposit, so it is not there in our question. So they are asked about our company is accepting public deposit. Now next question. So I think sixth question. Sixth question. So we are discussed about RBI accepting public holding. So we are discussed about two paras. Now question number 61. Khamna and Co. LLP, a firm of chartered accountant, as appointed as auditor of NBFC. So he is appointed as auditor of NBFC. Now the audit team which was involved in the field came across various observations during the course of audit of NBFC and also limited understanding of exceptions. So they have some exceptions which are required to be reported in the auditor report. The auditor would like to understand in details regarding obligations on the part of auditors, report exceptions in his report. So what are the exceptions will be there in audit report? So we are explaining last question. Para 3 explained. So for all NBFC we are explained, and after the all NBFCs we are explained about relating to accepting company, and after that they provided non-accepting company, and after that they are providing company not required to hold certificate of registration, some conditions will be provided, and after that when all completed they will provide some exceptions. So obligation of auditor to submit certain exception report to RBI, it will be provided. So firstly, where auditor required, wherein case of NBFC finance company, the statement regarding any of the items referred in para 3, so which is provided above, we are discussing in last question all NBFCs what are the requires that para 3, and for NBFCs which is accepting public deposit we are discussing that are there in para 3 above is may be unfavorable. So if the para 3 items is there any unfavorable or there is any qualified in the opinion of auditor, or the company has not complied, then they need to provide one exception report to RBI. If the NBFC is not complied the provisions of chapter 3B of RBI Act, so Chapter 3B of RBI Act is not completed by the NBFC, then auditor need to submit exception report to RBI, and NBFC company accepting public department directions is not completed. So we need to comply with the public directions to directions, so we need to comply. If not comply the directions, we need to report. If NBFC, which is non-systematically important non-direct deposit taking companies directions is not followed, or which is NBFC systematically important non-deposit taking companies or deposit taking company directions is not followed. So here mostly if you are not completed this one, we need to provide, or if you are as per above para, if you have qualified or unfavorable, we need to submit the exception report. So here they are provided NBFC, so directions here provided only the 3 directions. So whenever the NBFC, firstly all are NBFC only, if it is accepting public deposits, so that they have some directions we need to follow. And after that we have which is NBFC non-systematically important, then they also provided some directions. Next after that systematically important, this also non-deposit taking company, also deposit taking companies also they provide the directions, we need to follow the directions. If they are not completed, we need to provide, auditor need to provide the exception report to RBI, and it shall be the obligation of the auditor to make a report containing the details of such unfavorable or qualified statement and or about the non-compliance as in respect of company of the concerned regional office. So along with the RBI, we need to provide the report to concerned regional office of the department of RBI under whose jurisdiction the register of the company is located as per first schedule of to the NBFC acceptance. Next, auditor duty under para 1 shall be report only contravention of the provisions of RBI Act 1934. So this one will be provided only when there is contraventions of directions or guidelines or instructions or referred to sub para 1 of such report shall not contain any statement with respect to compliance of any of those provisions. So it is not talk about the provisions. If the company is not complied any provisions, it is not required to provide that exception report to RBI. Only this items is there, then required to provide the exception report to regional office of that jurisdiction of RBI. Next question number 7th one, the statutory auditor of NBFC is required to give a report to the board of directors. What shall be the content of audit report will be provided. So whenever the company, here the company with the statutory auditor of the company, so statutory auditor of the NBFC company is required to give report to the board of directors. What shall be the contents will be provided, and what is the company there are provided. So for this here I think they are missed some items. So whenever the auditor is there, what are the contents will be required for auditor audit report of the board. So for contents we can go with the in 7th only they will provide. So these are the complaints with NBFC audit report. So RBI direction they are provided. As per this, the statutory auditor which is being a non-deposit taking or non-systematically important is required to submit the separate audit report of the matters, and if it is, then they must take the relative information. So for that they need to provide firstly conducting NBFC. If you want to conduct the NBFC, you must have the certificate of registration so obtained. If you are not obtained, it will be offence under chapter 5 of the RBI Act. Therefore, if the company is engaging in the business of NBFC, they must obtain the certificate of registration and they must follow the directions issued by the RBI and press releases, whatever the press releases they are provided, and whether the company is obtained certificate of registration will be seen. And after the obtaining the certificate, they need to provide the entitlement, means The company is entitled that certificate of registration also provided as on 31st March to applicable year, and NBFC is meeting the required NOF net owned funds. Means net owned funds also will be verified as per the directions. So for direction they will have mainly two direction. One is systematically important, another one is systematically non-important company. Apart from the audit shall include a statement of following matters. So firstly, whenever they are giving for board, they need to give the board of directors pass the resolution. So they need to see the resolutions. What are the there in this resolution for non-acceptance of any public deposits? So we need to see the resolution. And is there any company accepting any public deposit during the relevant period? So is there company is accepting any acceptance? So any acceptance is there relating to public deposit. And after that, whether the company is complied with means company is complied with prudential norms or not. We will be seeing prudential norms relating to income recognition, accounting standards, asset classification, and provision for bad and doubtful debts has applicable to its terms NBFC non-systematically important non-deposit taking directions 2016. And where the audit report his statement regarding the items which is provided unfavorable or qualified, then auditor is to give the reasons, and is also required to provide the exception report to RBI. And if where the auditor is unable to express any opinion of any items referred above, then report indicated such fact. If we are not able to provide the, then you need to provide the fact for the reasons. After that, question number 8, 9, 10 we will provide it in next video.